you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. High anxiety in the markets. The AI trade extending its sell-off today. We will discuss and debate that and much more with the investment committee, as always. Joining me for the hour, Stephanie Link, Malcolm Etheridge, and Brian Belsky. Let's go check the markets today. We are red on the Dow. S&P and the NASDAQ, though, are green. And that is good to see because it has been, as you know, a very volatile trade within the NASDAQ. We have really two issues at hand, which I think you probably all know of by now. AI anxiety, that's a critical issue. Spending, valuations, debt raises. And then you also have a rate cut rollback, is what we're calling it. Real doubts now about whether the Fed is going to cut rates again in December. What was a formality almost has backed off that. Rates have been up, and those are the issues that we are facing. Steph, we'll start, though, with AI anxiety, because I do think the market has a case of that.
Yep.
It really started with Meta. Meta's spending related to their earnings report on October the 29th. Oracle's debt concerns have sort of become more acute. That stock has given everything back from its big earnings bump and then some. You had Sarah Friar of OpenAI, the CFO, make those backstop comments, which said, everybody sort of sat back and said, oh, that's interesting. Why are we talking about that kind of stuff? And then Michael Burry, who has been posting on social media almost every day for the last week, finally winding that up yesterday with his hedge fund being deregistered. That lays it out for you. What do I do with all of that as I think about where we are in the market and what seemed like a pretty good runway between now and the end of the year?
I don't think it's over. I think it's totally overblown. You know I've been buying, adding on weakness. First and foremost, we're in the early innings in AI. You're going to have volatility, though. These stocks have all had enormous runs. So it's totally normal to see volatility and to see pullbacks. Remember DeepSeek back in February? That was a buying opportunity of a lifetime. So we're going to get these things, these cautious commentary. I get it. The CapEx is actually not just in the technology space, Scott. It's in the industrial space. Listen to Dave Cote today, 2 hours ago on CNBC at Vertiv, talking about how they cannot meet demand and they have to spend. So you have technology companies spending $400 billion this year, the Mag 7. You have the industrial companies that are going to be spending about $200 billion. Utility companies to upgrade the grid, they're going to be spending about $250 billion this year and then some next year. And of course, power, we're so undersupplied in power. That is a 2-decade-long theme because it takes a really long time to actually get power. So there's that. But then, as a technology investor, I want to see companies invest to grow profitably. So Amazon grew earnings 36% in their last quarter, revenues up 13%. Meta grew their earnings 20%, revenues up 26%. Microsoft grew earnings 12%, revenues up 18%. Go to NVIDIA, I don't own it, but they grew earnings 54%,
all right,
and total revenues of 55%. And the one I do own in the semiconductor world is Broadcom, up 36% in earnings and up 22% in total revenues. To me, when you see companies that are making money and they're pulling back, and they're trading at a lot more healthier multiples. They're still rich, but I see that growth and that tailwind. I want to be buying, and that's what I've been doing.
Okay.
I added to Meta and I added to Microsoft.
Oh, Steph, let me get there. Let me get there. That was like a whole dissertation that ends.
Well, it's exciting.
All right, it is exciting. I'll you know what? Let's take the plan.
All right, go for it.
And throw the plan in the can, and we'll just go there now. So you bought more Meta and Microsoft.
Yes.
We had this little event called Delivering Alpha yesterday that we've had for like 14 years, okay? Mary Erdos was there of JP Morgan. She runs asset management and wealth management. She's the CEO. She was asked a question by Leslie Picker about a bubble. It's going to lead me to you. And here's what she had to say about where we are.
AI itself is not a bubble. That's a crazy concept. That's like saying our computer's a bubble. Like, we are on the precipice of a major, major revolution in the way that companies operate, efficiencies are found, and reaching your client in a whole different paradigm. The valuations of certain companies are reflecting what they think, what the markets think are going to be the winners and the losers.
Okay, that was my biggest takeaway immediately when Mary said that on the stage yesterday. This is not a bubble. Dan Ives says it's a buying opportunity, not the time to head for the elevators. You obviously agree because, as you said, you bought more Meta and Microsoft. Now, please tell us more, Steph.
Well, I just look at Meta and it's down 19% in 2 weeks. And it's trading at 19 times forward estimates. And I think those estimates are too low. The historical average is about 21 times. As I just mentioned, they're growing earnings 20% and revenues 26%. Their impression growth was up 14% in the quarter. So AI is working on the advertising business. Time spent up 5%, and in videos up 30%. And price per ad up 10%. So to me, oh, by the way, a $31 billion buyback. So to me, I think there's real value there. The stock is only up 5% in the past year. And they're at the forefront in terms of AI and in advertising especially. Microsoft, I haven't owned Microsoft in a long time.
Yeah, this
Scott.
is a new buy for you.
It is. So you know, it's down 6% from its high, so it's not crazy. But they beat in all 3 of their divisions. Commercial bookings up 111% and RPOs up 51%. That's great visibility. So it's not cheap. I get it at 29 times forward estimates. But for so long, Scott, it was trading at like 35 times. And I couldn't get my arms around it. But when I see this kind of growth, I think that's exciting, and so I'm looking for opportunity. By the way, I'm still underweight relative to my benchmark in Microsoft, so I'm just going to continue to add on these real ugly days, especially since they also have a $45 billion buyback.
Okay. All right. We got
I'm done now for the A block, right?
All right. Well, you do the whole A block.
I'm there. Yeah.
6 minutes. Ladies and gentlemen, after this, when we come back, no, I'm just kidding. Malcolm, what do you got?
I'm just curious, as a person who doesn't own Meta, I have no interest in owning it for the long term. When I hear you talk about the buying opportunity in Meta because of the investments that they are making, I share the concerns of the market, which are to what end, right? So all the other companies that you've named, there's obviously a path to profitability while we're waiting on that big payoff, right? So you talk about the cloud services that are able to, they sell cloud credits and they generate tens of billions of dollars in revenue on the way there. How much advertising can AI create that Meta can sell that justifies the spend in the next 2 to 3 years? Because that's the bet that the market is making sort of against that name right now.
The install base is huge. 60% of people around the globe are using some sort of form of Meta products. And I think that they
without AI, though.
Without yet. Look at what they are starting to monetize it, which is why I talked about the price per ad of up 10%. They are monetizing it. And the last time they went on the spending spree, by the way, Malcolm, I don't like that they're spending a ton. I was not happy when I saw that number.
Okay.
However, I like that they are going to see the return on investments over time. They did this when they did the whole metaverse nightmare, right? And they overspent, then they got religion, and then they actually saw the benefits of their investments elsewhere. So I think it's on sale.
So okay. I agree with the premise that for Amazon and Meta specifically, AI is going to improve their ability to target ads to the perfect right person at the perfect right time. I just am concerned that 70, 80, 90 billion dollars a year in investment to no end is where it's reasonable for shareholders to say, you know what, wait a minute.
No, but they are, right? That's part of the point of why we are where we are in this increased volatility. Meta they're 23% off its 52-week high. To some, it's a sign of caution. To some, it's a sign of opportunity. That's what makes a market. That's the whole point of what we're trying to do here, is have a debate and then leave it out there for you to decide what to do. Mary Erdos, no bubble. Do you agree?
I do agree. Thanks. It's good to be here on the Q block, by the way. We moved on. So I want to go over a couple things.
It's already Monday, but go ahead.
It is Monday. Let's talk about AI first, and then I really want to.
Do you think it's a bubble?
No, no, nowhere near a bubble. Here's why. Two facts. Number one, the man's not making money. Who's the man? Investment banks and bankers. We're not seeing these massive M&A deals. In frivolous seeing
a lot of debt deals.
So I'm talking companies buying other companies with stock. That was the essence of 99-2000, and you had lots of IPOs and lots of secondaries. We're not seeing that.
Right, and we're talking about two completely different phenomenons at different times. You're talking about nascent stage, no revenue, no earning e-commerce, minuscule companies that the market placed massive bets on of getting to some promised land in the future. We're talking about trillion-dollar companies today, and trying to make a comparison between the two.
I know.
I think that's tough.
That's why I have been making a living here the last 6 months with everyone trying to compare the current valuation and price performance of tech stocks like 99-2000. I think it's bunk. And I think we're in the second or third inning of this whole AI thing. That's number one. Number two, in terms of how these companies are trading, there's so much differentiation. The standard deviation environment in terms of price performance and fundamentals is all over the place. They're not aligned. And that's really a stock pickers type market in that area. The other thing I want to talk about is, we glossed over it too quickly, is the whole CapEx thing. Why is CapEx so important? On a sectoral basis, Scotty, look at the sectors in the S&P 500. The majority of sectors in the S&P 500 are at or near all-time lows in terms of debt to equity. In terms of price to free cash flow, they're at all-time highs. They've got cash to be put to work. And Stephanie's spot on the industrial. It's not just about tech. It's industrials, it's energy, it's utilities. There's going to be massive, massive reinvestment there over the next 3 to 5 years. And I think that's what's also ultimately on a fundamental basis going to lead us into more broadening out in general.
So you don't think that what's been happening in these names is anything more than just a typical rotation out of big-time winners into some areas of the market? I had suspected anyway, and I think I said as much in some of the conversations that we had around delivering alpha yesterday, that I didn't think that the market or investors would let these kinds of stocks fall that far. They're going to come in at some point, probably soon, and say enough is enough. And maybe today is representative in many ways of that. When you think they're not coming in, that's when they're coming in. And this is called a correction. And this is very, very healthy. I was worried a couple of weeks ago we had too many bulls. Everybody was way too bullish. Now we've had the bears come out, and that's fantastic news as far as I'm concerned. You don't want everybody on the same page. And so these bears have done their job and shook things up a little bit and afforded an opportunity for Steph to swoop in and talk about Microsoft. And for Malcolm, maybe. Well, I share Malcolm's discontent with Meta. I'm not going to buy that. But this is you nailed it, man. This is what makes a market, and the market is acting the way it should. You had a lot of air coming out of the momentum trade. The MTUM ETF had its worst day since October 10th. This is yesterday, of course. We are on track now, though, while we bring it up today, looking forward rather than back. We're on track for the third straight down week, okay? Coming into today, Rocket Lab down 26%, Axon down 23%. We mentioned Oracle and what's been happening there. Robinhood's down 14%. Brian, Palantir's had its worst month since December of 2023. Very popular name among people I know who watch this program. Yep. Broadcom down 7.5% month to date. That's the worst month since March. Okay. Vistra down 6%. I get the hype and the reality of powering AI. Vistra's worst month since August. You have Vistra, you got Reddit, you got Palantir. I know you have Oracle, but what about those kinds of stocks? Vistra is one of those stocks that was up on stilts, clearly. So was Reddit. The reason why we own Reddit is it's a longer-term alternative to some other media sides of things. So I think that obviously you had a lot of people chasing that. Palantir is the one that is interesting because obviously with its connectivity and how important it is to the whole AI cycle, it really stands apart relative to all the other stocks. And clearly it's expensive and it has come back down to reality. Oracle is the one that they have this war chest of cash. Traditionally, this is a company that has done an amazing job on their balance sheet. What they're doing in the marketplace in terms of the credit, it is a little bit worrisome, but at the end of the day, this is a longer-term core position with us, and the stock went up on stilts, and it's kind of come back down to reality. But I mean, leave this chart up, please. Yep. Because this is what I referenced at the very top of the program. Right. The euphoria around their earnings report and their AI outlook lifts the stock. It goes parabolic in September. And then it gives it all back, and then some in November. Is it a warning sign of what else might be out there? If you're sitting in Oracle and you felt great on that day of the massive bump, and you feel like garbage today because it's given it all back, now what? What do you do? Well, I think that's really healthy when you see a stock like that pull back. And, oh, by the way,
we've always advised investors, you're not going to be chasing earnings reports anyway. And everyone was really excited about AI, so they came out with great numbers and they chased the stock up. So this actually is very, very healthy.
Why aren't you buying more if it's a core long-term position as you just described?
Because we have a very big position already. And what we do in our portfolio is that we rebalance quarterly. So I think we feel very, very comfortable with our positions in that.
Could I jump in there real quick?
Yes,
Because
you
this
can.
is actually where I want to buy Oracle back. I'm sitting here with you, so obviously I can't at the moment, but
Oh, you can do that. People
He's got a phone. Let's go right here.
But I was literally on the desk making the call a month ago, maybe in October, when I said from 230 up to about 340, the stock basically ran up on all of the news that got stuffed out there from its earnings period, and the market reacted in a major way. So all the way back down to 230 is why I sold half of our position in it, and I'll be looking to buy it back now at that same level, because all the good stuff about Oracle and the relationships that it's created with OpenAI and others, its relationship to the Stargate project and everything else, that still exists. It's just that the market got way too euphoric, to use your word, for us to invest in it at that 340 level. And I think now is the place where a rational investor should be looking at this and saying, okay, I think this is a place to buy this thing.
Okay, so the other issue, let's pivot to the other major issue that we've been dealing with this week, and that is a move higher in yields. If you look at a 10-year, 10 years like 4.13, right? We were below 4. Now we're back moving higher. Now we're at 4.14. Why? Because there are doubts about December. Steve Leisman, our senior economics correspondent, joins us now. It is remarkable how we went from 100%, because I remember the day we had the conversation, and you showed October 100, December 100, and then 60 some odd for the next one into 2026. October 17th, we were at 100% for December. We got way over our skis, obviously, right?
Yeah, Scott, I just don't want you to hold me responsible for the data from the market that I present. It's not my data, it's the market data. So, but let me just tell you right now, Scott, the reason I was looking down at my computer when you're talking to me is we have now hit a new low probability for this December contract at 41%. And I was just checking when the last time it was that low, and you'd have to go back to September. But this is a new low, and it's ratcheted higher. Or the probability, the yield itself is ratcheted higher, the probability ratcheting lower for that December rate cut. You're looking there, by the way, that's October 17th. Right now, the current just changed in the past couple minutes, which is why I was double checking that. It's at 47%, was earlier this morning. In the wake of Jeff Schmidt's comments this morning, pardon me, and the move higher in yields on the 10-year, that tends to push down that probability. And so, look, Scott, Powell doesn't have the votes now for a cut. I don't think he does. I reported this a couple days ago on Fast Money, and it looks like the market now understands this, that when you look at the sum total of what people are saying, the votes are not there at the moment for a rate cut in December.
He said it himself. I mean, he tried to speak directly to the market in a way, and I think I said this to you, and we discussed it the very day of the Fed decision and the news conference, that he spoke so frankly to and directly to the market that you're over your skis. December is not a foregone conclusion, ... far from it. The market got the message.
I mean, I was trying to point out the market was over its skis going into the October meeting with its bet on December. I mean, I guess that's water under the bridge at this point, but the market has not been listening to what the Fed has been saying. And I'll give you an example of that. The September forecast came out, and it said the median was 3%. Well, great. But you look at the numbers, and there were 10 guys for 3, or 10 folks for 3, and 9 for 2 or less. So the market hears this median. Amid the froth of all the AI trade, the market says, oh, we're going to get a rate cut. We got high stocks, and we're going to have a great economy, and we got the rate cut too. So I just don't think they're listening to the Fed's growing concern here about the inflation numbers remaining stuck at 3% and not seeing any sort of clear sign or evidence, Scott, of weakness in the labor market that's animating their ideas about policy.
Well, because most of what they're thinking about remains anecdotal because the government shutdown, they couldn't get actual data, and we may never know where we currently stand based on the rhetoric out of the administration regarding the most recent data. We just may never see it, which means the Fed may never know it.
Yeah.
Which means we'll have to just push down the runway of when they can make a more thoughtful decision based on actual numbers.
Yeah, I mean, it's not all that bad. October will now and forever more likely be a data black hole, but we'll get the November data in December. We'll probably see that September data. I think they have that report ready. We've had a bunch of alternative data, some of which shows weakness, but the jobless claims data, which is pretty good, that we have been getting during the shutdown, has been pretty steady. So I will note, Scott, in this extended A block that Stephanie clearly dominated, and you were joking about.
Yeah.
I got to listen to all of it, and I enjoyed all of it, but I did not hear the Fed funds come up a single time. So when you guys were talking about what may or may not be bothering AI and the tech stocks, I would just like to point out my observation. It wasn't the Fed. Whatever's going on with there, maybe the Fed would help, but it doesn't seem like Federal Reserve interest rates are something that's troubling the thing that looks like it's most troubling the stock market right now.
I think you very perceptively and accurately point out where we are in the market. It's a cherry on top of what already had looked like a pretty good Sunday. So we're not wholly reliant on it, but we also, there's a limit to where we want to see, we as the market and an investing community want to see rates go, and that's why it becomes relevant if you have to dial back your expectations from 100% to 41. So that's why it's brought up, but I appreciate you making that observation because it sets up the next leg of our conversation, Steve. Thank you so much. That's Steve Leisman, our senior economics correspondent. Right? It's nice, but none of you think we need it of a rate cut. Am I accurately saying that?
GDP is running at 3.5% to 4%, and that's probably one of the reasons why you're seeing above-trend inflation to begin with. But I've said it many times that I would much rather have faster growth in the economy and a little bit elevated inflation from an earnings perspective.
Let's put it this way. If you look at what's working, okay, and what has been working, Brian?
Yeah.
The biotech story has been helped by the expectation of lower rates. Those companies, the smaller ones, are more susceptible to the cost of capital, right? So what's happening today? The IBB, the biotech ETF, it's up. It's up 1.5%. There is a trend that the market believes in behind that sector. It's up as rates are up, as rate cut expectations have come down. Financials have been doing quite well. Goldman hit a record high yesterday. Rate expectations come down, financials stay up. There is a trend here in this market that speaks to why Steve Leisman can accurately say we're not wholly dependent on rate cuts. There are too many other things that are working to the market's advantage.
Right. And part of the reason why, too, that biotechs have done so well, Scott, is because a lot of these biotechs have amazing balance sheets and have been able to build that war chest of cash, and they're out of the whole vaccine game and a lot of the worrisome stuff going on in big pharma. That's kind of number one. On the financials, if you think about what Steph said about, I will take a 3.5% GDP. I will take double-digit earnings growth all day long. And financials win by that. It's not just about where the stock market is going and what advisors are doing, but think about the commercial banking that is coming on. Not enough people talk about commercial banking is going to be huge. If we talked about in the prior A block a little bit about CapEx, a lot of these companies are still going to go to the banks and take out loans. We haven't talked about a commercial banking loan cycle for years, and no one's talking about that.
Well,
and I think that's going to be
private credit.
They went to private credit, but now look at what's happening to the private credit
Can we
companies.
also say that the market right now, despite what was an ugly-looking day yesterday, we're still on track for a positive week out of the S&P 500, okay? So that puts into perspective what's happened both in the AI trade and then everything else, financials and healthcare and what have you. To financials real quick before we take a break, you did take some profits in Wells Fargo. which I think was your largest position.
It still is.
Wasn't it?
It still is.
It still is, okay.
But it ran so much that it got to be a 7% position. And so I just took out 2%. Still like it very much. Still think it's the asset cap story, the lift of the asset cap story, which will lead to better profitability. And they've already raised guidance. I think they're still lowballing on that front.
All right. So let's take a break. We are back. We're going to start with Disney. Let's look at shares. Stock's coming off its worst day since April 3rd, that being Liberation Day. It's been a rough week. Let's take a look at the week, please. There you go. Look at that. That says a pretty good story there, Belsky.
Yeah.
The target cut to 152, or I'm sorry, to 152 from 159 at Wells Fargo today. What do you think about this stock? What do you think about where we are? What's going on?
What's going on? Well, we've whittled back our position in the stock across all portfolios. I think we own it in one, value. And I'm not going to come on air and say it's becoming more of a value stock. It's becoming more of a concern, especially considering all the other entertainment companies with respect to streaming and communication services. The clear leaders are coming forward, Scott. So it's for us. Again, I know you hate when I say this, but it is a relatively small position in our value. But it is becoming more valuable.
When the stock is like surging, right? How come when I go to people, they don't say, well, the stock's a very small position, but this is great?
I do. I've said that.
No, it only happens on the downside. It does, dude.
It
does.
I've said that I've been.
Don't make me go back and find it.
I've been too small in Palantir. Now it's actually
it's not just you. It's not just you.
I know. But
no, it's just a really small position.
But given. The whole reason why, the premise of why we bought Disney was because of Iger when he came back, and the on the operation side, Scott, it has not operated the way that we thought it had, and so that's why we've whittled it down to only one portfolio in the value portfolio.
Okay, all right. Progressive, you want to talk about that one? That got downgraded to hold from buy, target 232 at Jefferies. Stock's having a pretty good intraday move here, 2/3 of 1%. In a mixed tape. What about? I mean, insurance stocks haven't been all that great lately either.
They haven't, but we got through the hurricane season actually without a big issue in the United States. That's a big deal. Progressive has picked up a lot of market share the last 2 years, and their P&C product is still very, very competitive. So when you're looking at a diversified portfolio within financials, this is one of those insurance companies that we've wanted to own, and we're going to continue to own it.
All right. I said you've been. I was going to say something about the waste management. What you've been shoveling me for the past couple of minutes.
I know.
But this one was initiated overweight with 238 at Wells Fargo. What do you think?
We've owned this stock in portfolios for 20 plus years. I mean, waste management is the stock in industrials you want to own when you're worried about the economy.
Yeah.
So what we think going forward is we're still going to own it. We'll probably lessen our position going forward because we want to get actually more cyclical in industrials. And this is not a cyclical stock within industrials. It throws off dividends, got great cash flow. It's a steady eddy.
Like what? Like what? Give me a name that you think is
Parker Hannifin.
Cat? Like Caterpillar?
Deere, Honeywell.
Okay.
Those types of names.
You're speaking Stephanie Link's language now.
Yes, you are. You didn't mention any of those that I knew you own some of these, like Quanta Services, Eaton, Verdin, Rockwell. Rockwell Automation is really quite interesting. They have a new CFO, and they had a blowout quarter because the CFO is focused on margins. And so you're now starting to see operating leverage at the company. You haven't seen it in many, many years. That one is actually
those companies
top of my
have all
list.
benefited from this CapEx. Now there's going to be the next thing, the next phase, right?
Automation, robotics.
Big setup ahead of some big retail earnings next week. Going to be a pivotal week, and there's a lot of focus on retail. Let's show you the calendar, show you what's coming. It starts with Home Depot on Tuesday, but then you get Target, TJX, and Lowe's on Wednesday. Walmart, Ross, Gap, Bath & Body, BJ's finally on Friday. Brian Belsky, you own Home Depot, you own Lowe's, you own Walmart. Doug McMillon retiring, he's the CEO, retiring at the end of January of 2026. What's your take here?
Yeah, let's start there. Walmart's been doing an amazing job in this transition and talking about that, and they're not going to miss a step here. With respect to Walmart versus Target, Target's got their operational issues. We only own it in our value portfolio. Been waiting for the turnaround. I got the new CEO. You got to give it a few quarters to see what they can do. Lowe's is your value stock relative to Home Depot's kind of a core position. Quite frankly, Ross is a more defensive area. I think the star there of all of those is TJ Maxx in terms of what they've been able to do on the home goods side of things, and then also their traditional stores. So that's a long-term core holding.
If you own Target only in your value portfolio, like even Stephanie Link made the case, she doesn't like the stock that much. She owns it. But still thinks it's oversold, right? Or it's still down way too much, a lot of value. Do you see more value there? Would you buy? What would make you buy more? That was a long and convoluted way of getting to where I wanted to go.
We want 2 quarters. We want at least 2 or 3 quarters to see from the operational basis. We start to see some real turns and return on equity in that company and how they're spending their cash. I want to see how they're handling their inventory going forward and what kind of leadership we're going to come out of that. So I can live with the stock where it is in a value portfolio and see if they can turn around.
Malcolm, how come you don't own any of these names?
I much prefer B2B than B2C right now when you got 50% of spending attributable to 10% of U.S. households.
What's your take? I mean, I sort of said your target position. I don't think you love a lot in this group.
No, but
you keep defending the consumer, though, which is interesting to me. But you don't own that many of these stocks.
There's different parts of the consumer. I mean, I think housing is more attractive, better valuations, and I think it sets up well for next year. I think auto parts. I own Aptiv. I think that's primed to move higher, especially given the spin. I have seller's remorse in Deckers. I have seller's remorse in Gap, to be honest with you.
Okay.
And I told you that I might buy Deckers next year because I took the loss, the tax loss. Gap, there's nothing wrong with that company other than Athleta, and everybody in that space is hurting. So that's one that if it were to be weak on the report, which I don't think it will, but if it were to be, I would definitely buy that back. Richard Dixon is doing a masterful job at turning that company around and that brand around. So that's the one I find very interesting. It's trading at 12 times earnings. Target, I mean, they better not do a -4 comp, because that's the whisper number. If they do, this thing's going down even further. I don't think they will. This is Brian Cornell's last
quarter as CEO. But if there's like a big risk, if there's even a risk that they might, you have
one of the reasons I trimmed.
I know, but you take the risk of still holding into what could be an even lower position.
It's very small. It is, and I say that now ahead of and this thing, if it goes up 20%, it's still a very small position. If it goes down 20%, it's a small position because I don't have conviction in it. It's very hard for me to sell out the whole thing at 12 times earnings with a 5% yield with new management coming on, Brian Cornell's last quarter. So
if it went up 20% or down 20%, would you sell it under either scenario?
Probably. I probably would buy it.
Take the pop and sell it,
Yep.
or if it drops 20%, you just sell it because you can't deal with that anymore.
Yeah, absolutely. And I would probably look to Gap and Deckers.
All right. We'll do finals next. We got a good one at closing bell today as we finish up this week. A volatile week, no doubt. Tom Lee, Dan Greenhouse, Courtney Garcia, Eric Woodring of Morgan Stanley, the Apple analyst. So we got a lot to talk about before we wrap this week up. Before we wrap this show up, we got to do final trades. I turn to Brian Belsky.
Scott, we're
the
going
humble, humorless capital management.
Thank you. We're going with Raymond James Financial, one of the last standalone brokerage firms. It's a wonderful shop with both a broker-dealer and an asset management business.
No.
I'm going Zscaler. It's been falling this week, but earnings are in a couple of weeks. I expect them to be strong.
Linkster.
Palo Alto.
All right, good stuff. The exchanges now. All right, Court, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with this newly volatile stock market, what it means for the end of the year run that so many were counting on. We'll ask our experts over this final stretch. We'll show you the scorecard first with 60 to go in regulation here. It is a mixed picture. It's a better picture than what we started with, certainly. And by the way, we could actually end this week on a positive note, even with yesterday's sizable upset. We'll track it to the finish. The S&P is still positive for the week by about 0.5%, so that's certainly worth watching there. Mega caps are split today. Tech as a sector, though, is positive, so that's helping the overall picture. Energy, it's the biggest winner in terms of some individual names moving that we need to know about today. Walmart, their CEO is retiring. Under Armour ending its relationship with Steph Curry. And Warner Brothers higher on reports that Netflix, Comcast, and Paramount all preparing bids for that company. Finally, Alibaba shares. They are selling off on an explosive new report from the FT. We'll have details for why that stock made that move midday and now sits down by some 5%. All of that takes us to our talk of the tape. Where stocks go from here as NVIDIA earnings loom large and the debate ramps up over a December rate cut. We start with our tech reporter Deirdre Bosa and this growing AI anxiety, exactly what it feels like, Dee.
Yeah, so Scott, it's not just one headline, right, but AI anxiety by 1,000 cuts. There was Meta's outlook in late October, spending now far outpacing revenue growth, then questions over Oracle's balance sheet and the increasing role of debt in the boom. OpenAI backlash, too. The awkward, who could forget it, Sam Altman interview with Brad Gerstner, where Brad asked him about financials. Altman snapped back that he could find a buyer for his shares, quickly followed up by CFO Sarah Friar having to clarify comments over infrastructure commitments. This week, the short sellers came for the AI trade. Michael Burry, Jim Chanos, sounding the alarm over depreciation and more spending, which just continues unabated. Scott, if I can add another red or maybe yellow flag, this ever-growing AI startup bubble in the private markets, because exuberance and ever higher funding rounds among startups, that translates into public market dependency on their burn, more earnings that are based on their valuations. This week, I was able to talk to a number of startup founders and executives that are building in the space, the CEOs of Replit and Credo AI, OpenAI's VP of engineering. They're seeing the demand side, and they say that there is no slowdown whatsoever. It tracks things that we heard this week from the likes of Lisa Su on Squawk Box as well. All of it adds up to a debate, though, that is growing louder, and that is whether the AI trade is showing cracks and how deep those cracks might run, Scott.
Yeah, that's a perfect setup for us. Dee, thank you very much. Welcome back. Bitcoin dipping below 95,000 today, its lowest level since May. Let's bring in Tom Lee, Fundstrat's head of research, a CNBC contributor. He, of course, also the chairman of BitMine. So it's good to have you. Ether's down 8.5% this week. Bitcoin's down 8%. BitMine is down 20%. What's happening here?
Scott, I think we're still seeing the repercussions of that April 10th crypto deleveraging event. You know, it was the biggest deleveraging event ever. And there are still, I think, some market makers that have some balance sheet issues that are trying to raise capital. So I think that this is leading to a market that is kind of raised. You know, every time we get a bit of a rally, there's some capital trying to be raised. And I think that's what's suppressing crypto for now. That's, of course, going to end soon, but I think that's led to why crypto has underperformed equities since October 10th.
Can crypto treasuries, like yours, for example, can they trade as well or in tandem with a cryptocurrency itself, or does one have to trade at the expense of the other? If I'm going to see money flow into Bitcoin or crypto treasuries, wouldn't it then come out of the actual pure play coin itself?
Not exactly, Scott. For instance, when BitMine has shareholders and institutional capital comes in, and you know, JP Morgan, Invesco, BlackRock are buying big stakes, then that capital is then used to buy Ethereum. So it's actually going back into the ecosystem, but then it's going into a vehicle like BitMine that's actually a permanent holder. You know, BitMine owns 3.5 million Ethereum, more than 2.9% of the supply, but now that is not going to be subject to liquidations because there's no leverage used to hold that Ethereum. And then at some point, that 3.6 million or 3.5 million Ethereum is going to be staked and then generate, you know, nearly $400 million in net income. Well, that can create returns for shareholders. So in a way, a crypto treasury is actually a pretty attractive equity because there's a, you know, an income component plus there's, of course, that ability to grow your Ethereum holdings per share.
But what if crypto treasuries become more favored than crypto itself? There's no negative impact for either the way that Ether or Bitcoin would trade if just more money floods towards the treasury part of this story?
Well, one, it's a conduit because, as you know, equity managers, many of them, the 4,000, can't own crypto directly, so they have to get exposure to Ethereum by buying a stock like BitMine, and BitMine is the 438th largest stock in America today. It's not that different than if someone wanted to have exposure to energy, they can buy oil and trade a commodity, or they can take like oil barrels at home, or they can buy an oil-related stock, you know, either a major or something in the supply chain. That's what crypto treasuries are, is essentially an asset class that gives you direct exposure to the crypto asset.
All right, let's pivot to the market itself. Is your confidence at all shaken in where we are and what you thought the prospects for an end-of-year run could be after what we've seen this week?
Well, it's never fun to see markets wobble and then stocks that are quite popular like AI and the quantums and nuclear come down so hard. But it is consistent with the idea that, we were up 6 months through October, so the market's overbought. We expected 2 weeks of consolidation, which is what we're getting. And then, of course, as you know, there's hawkish Fed talk, so there's a bit of a tantrum the market's having. But between now and year end, we still have really good seasonals. The earnings have been good. Sentiment has flipped negative, Scott, as you could tell. I mean, the AAII went to negative 17.5. So I'd say the risk reward is still really good for equities into year end. And yeah, I think the S&P will be over 7,000 by the end of the year. In fact, maybe over 7,000 by the end of the month.
No cut in December. Let's just say that that's now the base case. And AI remains volatile. The broadening trade looked pretty good at times this week, to where we were thinking of, okay, maybe we're going to get an everything rally. You think that's possible?
Yeah. I mean, I think one reason the Fed is backpedaling on a cut in December is not because they have more confidence that inflation is strengthening. In fact, many of them said they just don't know, but in general, they agree it's probably not. I think that there are signs that the labor market is maybe stabilizing. So you actually have a Fed waffling for the right reason, which is, look, if the employment market's holding up, the Fed doesn't have to cut. That's still a good environment for equities. I'm not trying to spin it, but it's not a bad reason if the Fed is starting to have second thoughts.
Okay.
Always.
Tom, I got to leave it there. I appreciate you. I've got some news that I have to get to, though. I'll see you soon. That's Tom Lee. Now, the Closing Bell Market Zone. CNBC, senior markets commentator Mike Santoli, CNBC contributor Requisite Capital's Bryn Talkington, and Northwestern Mutual Wealth Management's Matt Stuckey are all here to break down these crucial moments of the trading day. Michael, it's been an interesting week. What are you going to leave us with?
It's been a fascinating week that it looks like we're going to escape with the indexes being basically flat, which is remarkable considering the gyrations along the way and really how much stress there were in the most widely owned and examined parts of this market. Now, we're definitely in a somewhat bumpier, higher volatility zone. The downside this week from the highs took the S&P essentially back to where we were 2 months ago. We first reached those levels. So as a matter of fact, the historically weak period of September and October did slow the rally, but it did not really do much except at this point flush away maybe some of the excessive positioning in some of the more aggressive areas of the market. I know people are taking some heart in the fact that financials hung in there. The broader tape really didn't have as much damage done, but the crypto moves are unnerving people. Sure. Bitcoin's not getting traction. So we're just sort of wondering if there's portfolio stress that still has to work its way through.
Yeah, there's your look at Bitcoin below 95,000, as we said. Leslie Picker's been watching for 13Fs, which are dropping, and she has one to tell us about. Les?
Yes, Scott, the deadline is today. The one that just dropped was Co2. It is boosting its stake in Alphabet by more than 250% to a stake worth about $1.8 billion as of the end of September. That's kind of opposite what we saw with Appaloosa and Baupost, which trimmed Google's parent company during the quarter. On the AI infrastructure side with Co2, though, there were some sales. Co2 cut CoreWeave by 62%, but still holds just under $1 billion stake. It also trimmed NVIDIA a bit, which may be portfolio management for them, the firm slashing ARM and AMD as well, just kind of in that chip space. As always, this is a reminder, these positions are as of the end of 3Q. They may have changed in the 6-week sense, but Scott, we just spoke with Co2's Philippe Lafont yesterday at our Delivering Alpha event. We asked him his views on AI, whether it's in a bubble, and he said when you look at previous bubbles, it's not obvious who wins. He noted we could be, quote, making the mistake of thinking that someone who appears to win ends up not winning. I don't know if you can read between the lines with the 13F today, but at least we have kind of a fresh look at where his head is at.
Yeah, we do. Les, thank you, as you led that conversation, of course. That's Leslie Picker. Matt and Bryn. Bryn first. So where are we now as we finish a newly volatile week in the markets?
I think what's happened this week has been very healthy for the market. I think the market is saying to the oracles of the world, hey, if you're going to go negative free cash flow, and you're going to saddle yourself to a private company that may have decent revenues, but it's still early days, we're going to penalize you. And I think this is very good for the other companies that are like spending like crazy, that there's only so much we're going to allow you to spend. Otherwise, we're going to penalize your stock. So I'm hoping like level heads will prevail, that we won't have these like daily conversations with Jensen, Sam Altman, Lisa Su announcing crazy big deals, and they can keep their head down, do the work, and there can be some type of sanity in the market as it relates to the spend that these companies are doing relative to their balance sheet.
Matt, how do you see it?
I agree with a lot of what Brendan was saying there. Since the April lows, the Nasdaq's up more than 50%, and it's been somewhat of an uninterrupted advance. That can increase the risk profile, especially when it's been momentum led like it's translated into over the summer with non-profitable companies, more speculative types of investments kind of really leading the charge. And really, if you look under the surface of kind of the price action this week, that's where the major damage was done, kind of taking out a lot of that froth. And I think, again, that's a healthy sign that investors are starting to make sure that they're looking at not just the upside opportunities, but also some of the risks that are present in some of this speculative behavior that we've seen manifest over the last few months.
Mike, what makes people especially nervous, and Bryn really hit on it, is that it's not just Oracle. There are so many other companies. It's a whole trade in some respects that is leveraged to OpenAI. And any stumble by that company anywhere along the way has not just ripple effects, but what could be waves turning into something even larger potentially.
For sure. And what OpenAI has obviously done is just try to knit up this web of partners and try to lay claim on scarce resources in terms of data center and processing and capital in a way that tries to secure a head start and an advantage for OpenAI, as you would do if you're competing, with others. But what that also means is, and what the market is kind of registering and punishing Meta shares and punishing Oracle shares, is there's just not going to be enough to go around. It's not going to be winners across the board. So what does that mean down the road? And I really do think the JP Morgan report this week that said, whatever it was, you need $650 billion in revenues to start coming back to justify this level of spending over whatever number of years. That's what got in people's heads. And that's also, though, assuming that all the investments need payoff. All of them are not going to get paid off. So I don't think that means we're at a critical moment that all of a sudden the credit markets are going to seize up or they're going to start to deprive these companies of capital. But we are going to be always with this debate. We're never going to escape the moment where it's like carefree again and everybody is going to be getting credit for being a winner.
A week in which, too, we got, from B of A, Michael Hartnett saying short hyperscaler debt was one of his best ideas. So it just gets people talking and it makes a market more volatile. Bryn, so taking all of that into consideration, what does it do for us over the final, let's call it 6 weeks of the year?
I think we're going to be bouncing around a little bit more than we thought we would, because obviously the government shutdown, the data that we're going to get around the economy is going to be late and stale if we get it. I do think we had really strong earnings, so that's definitely a ballast for the market. And so I think it's going to be like, what's going to happen with inflation? I will say that 55% of components in CPI are growing above 3%. And so I don't know if this December rate cut, which has already come down, is going to happen. So I think we're going to bounce around here. But this a little bit air out of the balloon to me has been very positive longer term, setting up for 2026.
Yeah, Matt, do you think that people should take advantage of the volatility, the pullback in the market? It seemed like it was hard to find bears out there, and this week, if nothing else, just maybe rekindled some of the negatives that are lurking out there.
Yeah, that's a really good point. There hasn't been a whole lot of kind of bearish activity prevalent in markets the last few months. But, in the background, there still is, the labor market that has been softening. And while we haven't got a lot of good, clean government data, obviously the last month and a half, there has been some survey numbers that, aren't necessarily built bullish by any means. If you look at University of Michigan's survey that, asks respondents, do they expect higher unemployment rate? Just hit the highest level since 1980. If that corresponds to a jump in the unemployment rate, that is something that's not necessarily bullish. But at the same time, we're dealing with a situation where, we're in a situation where we have back-to-back really strong earnings seasons where we might finish Q3 with mid-teens earnings growth. That by any means is a really strong reporting season across the board. And so it's a balanced picture. And, I think the message that you take away from that is just continue to embrace diversification, emphasize quality and security selection, probably stay away a little bit from some of the non-profitable areas of the market that have been really kind of bid up over the summer times and really starting to correct in recent weeks.
Bryn, how closely are you going to be watching interest rates? We can show the 10-year here was back above 4.15 earlier in the session. It's certainly getting the market's attention.
Yeah, we always have to watch that, right? But I will say a steepening yield curve is not necessarily negative because it's showing you actually that GDP and growth in the economy could be increasing. So if we have a steepening yield curve, that's really not necessarily a bad thing. I really think it's about inflation and employment that I'm going to be focusing on more than the yield curve.
Yeah, I can tell you. Inflation is sticky. I think we are learning that, and the labor market is a little bit dicey. What if December is in fact a no in terms of a cut? What does that mean?
I think that's going to put the market a little bit on pause. I think the people that got back into small cap, maybe like some private equity trades like Apollo and KKR, those take a rest. I think there are going to be sectors of the market that are going to retreat if we don't get a rate cut, but especially the real economy, because the real economy still has got a decade of zero rates. That those lower rates, especially in real estate and housing, could be very meaningful for the real economy, not the stock market.
Matt, are we back to watching the bond market as closely as we're watching the stock market again?
Well, I think if rates really start backing up aggressively from here, kind of more to the 450 area code, that starts to impact multiples quite a bit. Corrections in the market, they tend to happen because either interest rates spike up or the unemployment rate spikes up. If you get both of those, then yeah, you can start to get some concern on the part of investors. Right now, we've really just gone from pricing in 6 cuts to 3 to 4 cuts over the coming 12 months. And so this move up in the 10-year, I think, is more a reflection of that reality versus, an indication that things are going to be screaming higher in the bond market.
All right, good stuff. Matt, thank you. Bryn, of course, to you as well. Good weekend to you both.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. We just saw Tom Lee on Closing Bell. We saw some clips from the halftime report. And in this video, what we're going to do is go over a number of the stocks they talked about and discussed. So this is going to be interesting. We're going to look at the technicals. We're going to use Ichimoku. That's an interesting indicator. And you can see, actually, we have a list of about 24 stocks and ETFs that are listed here, including Tom Lee's Granny ETF. So you don't want to take a look at that. We'll also take a look at BMNR, Bitmine Immersion Technologies. We'll look at the index ETFs. We'll look at some of the Mag 7 stocks right here, plus Tesla. We'll include some of the sectors, and we have one member request, okay, ORI. So before we get started, let's do the following. Let's take a quick look, actually, at how the markets did today. So we've got the Dow in the morning. It actually gapped down. It was looking pretty dire right in the morning. You can see that it developed that little triangle right there, and then boom, it popped. So yeah, they bought the dip. Okay, so basically the market started moving up in the afternoon. It dropped a little bit, created a lower high here than the prior high, and then actually closed under this low here. So it was down 0.65%. It was down the most, right? The NASDAQ also gapped down in the morning. So we had that hammer that built right there. That was, we see the hammer, a very bullish candle. So once it reached that level, you can see the buyers pushed the price up, and then it moved up. It actually stayed above yesterday's closing price, but just slightly, up 0.13%. The S&P 500 also gapped down in the morning, created a hammer that you see right there, moved up, and this one dropped slightly under yesterday's closing price, down 0.05%. And the Russell 2000 was up 0.29%. You can see that right there too. So that's interesting. Let's take a look at the heat map. And you'll notice that a lot of the stocks that didn't do so well yesterday started to actually recover, like Nvidia, Broadcom, Micron is up 4.17, Oracle up 2.43, Microsoft and Palantir were up. But Amazon and Google were down slightly there, down 1.22% for Amazon, down 0.78% for Google. Meta was slightly down 0.07%, and Tesla up 0.59. The financials didn't do so well except for Wells Fargo. The energy stocks did quite well today. You can see the green right there. Basic materials didn't do so well. And everything else was very mixed. If we look at the sectors, oh, you know what? Since it is the end of the week, let's always take a look and see how all of the, the S&P 500 did for the week, right? That's important. So let's switch it up here to the heat map. We'll select the 1 week performance. There you have it. So you can see overall it's a very mixed picture with Tesla down 5.86, Amazon down 3.98. The healthcare stocks did really well this week, right? So did energy. Utilities not so great, right? I mean, it was okay. And the financials also did not do particularly well. But Berkshire was actually up 1.98%. So that's interesting. So let's look at the groups. And this here shows us the sector performance. And you can see energy technology at the top, up 1.21%, up 0.57% for the day, just for today. Basic materials and consumer cyclical were down the most. If we look at the 1 week performance, though, healthcare and energy at the top. In fact, yeah, up 3.71% for healthcare, energy up 2.37%, and then basic materials up 1.67%. Technology down this whole week, down 0.26%. Consumer cyclical, industrials, utilities also down. And there's the 1 month performance. Again, healthcare and energy for the month and financials are the top 3 performers with energy at the top. Okay, so let's get into the stocks now. We're going to start off with the these ETFs that we've got here. FEZ represents the Euro Stocks 50. And let me just make this a little bigger. Okay, there we go. So yesterday we talked about how FEZ basically developed this bearish, engulfing pattern. It's when you have a large red candle followed by a small candle. That's not a good sign. The only positive thing that happened was that it stalled at the 63.70 level, but there was a higher probability that it was going to drop. In fact, it did. It gapped down all the way down to this level here, and then the buyers stepped in and started pushing it back up. So this is what it looks like on a 5-minute. There's the gap down, and then you can see how progressively throughout the day the Euro stocks did well. I mean, they went sideways towards, let's see, what time? Between 11 a.m. and 4 p.m., they did start moving sideways. They were down 0.8%. Now, what I like about FEZ, though, if we look at the daily chart and the weekly chart, which is what I like to, utilize as far as figuring out where exactly we are in relation to the strength of the trend, right? We want to look at both the weekly and the daily. The daily looks good still. We hit a higher high here than the prior high. We've got a higher low here than this low. And we found support at the moving averages and stayed above. And this is the key thing. We stayed above the 9 period, the green line right there, the Tenkan-sen. And we also stayed above the 26 period, the red line. All right. And we're still above the cloud. And the Chikou span, which is today's closing price, is still above the candle 26 periods ago. The cloud itself is still bullish with the Senkou span A above the Senkou span B, and everything is looking pretty good. It looks like on Monday we might get a bounce here with the FEZ. I mean, that's just my best, guesstimate there. So let's look at the rest of these now. And by the way, here's the weekly chart. So you can see, we're still holding up above the moving averages on the weekly chart. We did develop a shooting star, but what I'm also noticing here, it almost looks like an ascending triangle pattern that's building right there. So it's kind of prices getting squeezed in this little area here. So any positive news for the market will help it push through that 63.70 level and then reach, move towards the next target, which is 66.26, which is a monthly level. If I switch it to a monthly chart, we can go back. We'd have to go back in time. That's the all-time highs. Back in, let's see, when is that? 2007 is the last time the Euro stocks were at that around at 66.26. So that's interesting. So something to keep in mind. Let's take a look at the SPY. S&P 500 down 0.02%. So you can see that, again, something similar where price gapped down in the morning. It found support at the cloud. All right. So these are always going to be support levels like the Senkou span A. When price comes down to it, you're most likely going to find a little bit of support. Or even if it comes close to it, like right there where it developed that hammer and then pushed back up. So the only thing I'm slightly concerned about is on the daily chart is this other indicator that I like to use, the directional movement index. I have it at a setting of 9. You'll notice that the negative DI Okay, the red line is moving up and the positive DI9 is moving down and the ADX is moving up. That represents momentum increasing to the downside. But the candle itself tells me a little bit of a different story. If you look at the 5-minute chart, for example, here, you can see that, yes, we did gap down. Here we are on the 14th. But as the day progressed, let me throw on a 10-minute. You can see it moved up. And so it's now inside the cloud. So, you know, overall, I think there's a higher probability that we might bounce here. If, again, it's all dependent on the news, but it's looking, you know, okay still. We're still technically very sound as far as the trend itself. The other thing that concerns me is the Chiku span. You can see here it got under the price right there. So that's something to keep in mind. And here's the weekly chart. We're still holding up barely right above that Tenkan-sen. Remember I mentioned that yesterday. I said, you know, we've been in this very strong trend on the weekly chart. If price closes under the 9 period here, that could be trouble. And luckily, the closing price here was 671.93, okay, today. And the green line, which is the Tenkan-sen or conversion line, is 671.27. You can see that in that box that just populated. Okay, the baseline is the Kijun-sen, lead span A, lead span B. Those are the Ichimoku numbers. If you guys like the software that I'm using, it really does help with your trading so that you can identify the weakness in any stock or ETF. It's called TC2000. To consider, you know, checking it out. You can get $25 off with the coupon. If you go to the 9 more links right here on my Blue Cloud Trading site, you'll also find it in the description area. All right, and this is what you just click on this link here and add your email, and there's the pricing real quick. And monthly pricing is $49.99 for the premium. I would recommend this one because you'll be able to draw on the charts. You can't do that with the other. Well, you can't do it with the basic. You can do it with the premium as well, but that might be overkill if you're starting out with TC2000. Okay, and if you want to reduce the cost of this per month, you can pay for it up front for 2 years biannually, and drops the price down to $37.49. Okay, let's get back. So here we are, and the Qs, it did close under the Tenkan-sen on the weekly chart, so that's a little bit concerning. Now it does. It's kind of like the candle itself is not really conclusive here. If you look at the daily chart, like I said, we have some potential of bouncing off the cloud here. We shall see what happens on Monday. It was up 0.08%. So we'll keep an eye on that. Dow Jones also dropped, creating a spinning top right above the Kijun-sen, but this also formed. Closed under the Tenkan-sen. Here it is on the weekly chart, though. Still holding up, but with a shooting star type candle. That's a very dangerous type candle. Russell 2000. This one for 2 weeks. Now we're looking at a weekly chart. 2 weeks in a row, it's closed under the Tenkan-sen. On the daily chart, we've been in an established sort of like little decline here for a bit. You know, you can see that little channel that has built up on the Russell on the daily chart. And it doesn't look great as far as the directional movement index is concerned. You can see, again, negative DI moving up, positive DI moving down, and the ADX is moving up. That's not good. The VIX dropped a little bit, down 0.85% today. It came up, touched the Kijun-sen on the daily chart. That's the market volatility and fear index. We do want to see this declining, and when this is declining, that's a positive. But we're still holding up above 200 here, so we're not out of the woods yet. Okay, now let's check out the stocks they talked about real quick. And out of the 24 stocks that I'm going to summarize these very quickly. I'm not going to spend too much time on each one. I'm going to run through them very quickly, and I'm going to use the Ichimoku indicator to just briefly, like I just mentioned, we want price to be above the 2 moving averages and above the cloud. We want price to be in a nice strong uptrend on both the daily and weekly chart, as we are here in IBB. You can see that, right? And that's why it gets a blue flag. The rest of these stocks, there's something off, technically, right? Even the VRT that's up 4.48% today, we're going to get into that in a second. So let's look at IBB. That looks pretty good on the weekly chart. Very strong uptrend still. Here it is on the daily chart. we talked about that yesterday too. I said that was very strong. TJX companies. Now on the weekly chart, still in a very strong uptrend. Cloud is still very bullish here. And here it is on the daily chart as well. It's pulling back these last few days here, you can see, but it's holding up above the moving averages, which is important, establishing a higher high than the prior high. That's what you want to see, folks. You do want to see a stock moving up, all right, in an upward channel, ideally. You don't want to be jumping in when the stock is dropping because it's hard to determine when that drop is going to end. And there can be very extended drops in the market. There can be. So TJX I like. All right, now VRT. Okay, so this one here, we can see that technically we've got the Tenkan-sen crossing under the Kijun-sen. That's a bad sign right there. Okay, and that happened on the daily chart. The Chikou span is still above price. That's positive. We're still above the cloud. And in fact, we also have a bullish engulfing pattern here. The red candle here was engulfed by this bullish candle. That's called the bullish engulfing pattern. And everything still looks okay on the daily, except for, like I said, it's under these moving averages. So that has to change. I wouldn't be jumping into this yet. Weekly chart still holding up above the moving averages in the cloud. So overall, if you look at the longer picture, it's still in effect, and it's still in a strong uptrend. But right now we have short-term weakness in this one. Granny, we have some short-term weakness. Now here's the daily chart. So you can see that this ETF as well. This is Tom Lee's ETF. This ETF as well has dropped. You can see the Tenkan-sen crossed under the Kijun-sen. Prices enter the cloud. We can very easily see that we've got a decline here, a lower high than the prior one, and we took out this low. So now we're technically in an established downtrend on the daily. All right, now we did stall at the bottom of the cloud. There's a possibility that it could bounce here. All right, I wouldn't be shorting here. Okay, this is not the time to short because you still have support, certainly. And if you look at the weekly chart, this is the first week where price closed under the 9 period. Okay, so over here we talked about that candle that broke through that box and then it continued moving up. Now all of a sudden we do have weakness, and I'd be very concerned about this one. If you have profits in this specific ETF, you may want to take some of those profits potentially if you see price getting under that cloud, especially. PANW, Palo Alto Networks Inc. All right, this one has also established a downtrend here. Very easy to see. Okay, inside the cloud, so stay out of that one. That's the daily chart. And here's the weekly, also closing under the Tenkan-sen. What about ZS? This one also closed under the Tenkan-sen this is Zscaler. There's the weekly chart, there's the daily chart. It could bounce here, but again, not the time to add positions. RJF is under an established downtrend as well. All right, you can see that there. Wait for the strength to come back in. And here's the weekly chart, closing under the Kijun-sen. That's it's now potentially going to drop further. It does have some support. You can see these lows here are holding up slightly. If it gets under those, then expect it to drop to the next level of support. And it's really up to each trader to determine when they want to exit the position. You might really like the stock, and that's completely up to you, but I'm just giving you a heads up of the weakness that we're seeing right now. Gap, the consumer cyclical sector, apparel stores. This one on the weekly chart popped above the cloud, but it's still looking relatively weak here. You can see the cloud is very flat, and Senko Span A is just right under the Senko Span B. I'd stay out of this one for now. Daily chart, yeah, stalling at this 2506 level. It does look more bullish here, obviously, on the daily. But if you don't have both time frames confirming, it's not usually a good idea to jump in. Deckers, under the cloud, under the 200. It's broken through that 200. I'd stay out of that one. Excuse me. APTV, 200-day declining. Notice how it found resistance there at that declining 200-day moving average. 4 times, got under the Tenkan-sen. Okay, once it was under the Tenkan-sen, it stayed under there, and then it dropped some more. So this is not a good sign for Aptiv Auto Parts on the weekly chart. Here it is on the daily chart. You can see that it also broke through this low here and this low. That happened today. Okay, it's inside the cloud though. So the next level of support will be the cloud itself on the daily chart, and that's about another, I don't know, 3.5%. LOW, which is Lowe's Companies, home improvement stores. This one too, looking weaker. I think we talked about this the other day. I said, you know, it's under the 200. It's under these moving averages. Today, it actually closed under these lows here too. That's not a good sign. And if you look at the directional movement index, it confirms everything, right? ADX is going straight up. So is the negative DI, and the positive DI is moving down. So not looking good. TGT, also inside the cloud. I'd stay out of target. There's a daily chart, and here's a weekly. Look at that. Is this the time to get in? Heck no. All right, I'd stay out of it. Walmart is under the 105.30. It's based on that prior high from February 14th. Finding a little support at the Kijinsen on the weekly chart. It might, bounce to this coming week. Like I said, look at the daily chart. We do see that price got weak. It got under. It actually gapped under the cloud. So this is interesting, right? You see that here we were on Thursday, gapped under the cloud, comes right back above the cloud, all in one candle. And it was still down 0.06% because it closed under the closing price there of the prior day. But it doesn't look so good. The volume is increasing here, so Walmart, not the time to be jumping in here because it's showing a little bit of weakness. But this is a good sign, at least, that this candle represents, the bears try to push it down, and they did. They were successful. They brought it all the way down to 98.75 price of that. That's what that wick represents, is the low of the day, right? Which was actually, 98.88 was the low. And then it finally closed at 102.48. So it had a pretty big move here, approximately 3.65% move or so, all in one day. But you'd never know it because you're just looking at the negative 0.06. So that's why the candles can tell us the whole story of what transpired throughout the day. And if you want to look at this from more in-depth analysis, you can switch it down to a 5-minute, and there's what I'm talking about. So here's, again, on the 5-minute chart with Walmart, you see the price gapping down, right? The dotted green line represents the opening price right there. And then it continued to drop, right? Probably scaring out a lot of traders. If they had placed stops, all those stops got taken out, right? And then basically right after it reached a certain level, the buyers came in, pushed it up, and then kept on pushing it up. And on the 5-minute chart, you can see it's now finding resistance around the prior day's closing price, which is that dotted red line. Okay. All right, let's keep going. On the daily chart, we're going to look at ROK. This one here pulled back, but popped back above the Tenkan-sen. That's a good sign for on the daily chart. ROK, Rockwell Automation. So it actually needs let me just double check the weekly chart. Okay, so this one actually does qualify, and we'll give this one the benefit of the doubt because it did close technically above the Tenkan-sen. We'll give that one a flag, okay? PGO. I think I messed up the whole order here. All right, no biggie. We talked about APTV, Lowe's, Walmart. Here's Alibaba. All right, so not looking good for Alibaba. Let's start with a weekly chart. So here it is, under the Tenkan-sen. All right, so you can see that on the weekly chart we're not we don't have a bullish scenario here quite yet. We need to get back above Tenkan-sen. On the daily chart, we've already established a downtrend, and the downtrend again, folks, is how do you know that you're in a downtrend on a specific time frame? Two things have to happen. One, you have to have lower highs, like this high here is lower than the prior high, and you have to have lower lows. So there's a low, the prior low, and we just accomplished that here with this candle. So that we get a lower low. Lower highs, lower lows represents a downward trend, okay? And that can last for a little while. We'll see how long that lasts. All right, but it closed under the cloud, so it was down 3.78%. PGR, under the cloud, Progressive Corporation. I'd stay out of that one. There's the daily chart. There's the weekly, also looking bearish. I mean, we saw a little strength here today, but that's not enough to change the course here necessarily. Disney this is an interesting one because we can see that back on Wednesday we were above the cloud, and then we had that big gap down yesterday, and now it's continuing, right? Down 1.68%. Not surprised by that. Wells Fargo, in between the two moving averages. I'd hold off on this one. It's still above the cloud technically, and on the weekly chart, it's still above the cloud and moving averages. So this one is not looking that terrible here. It was up 0.41%. It just needs it needs to pop right back above that 9 period so that we have a confirmed strong uptrend for WFC. Right now we have a weak uptrend. JP Morgan, weak uptrend, right? We're inside the cloud on the daily and on the weekly chart. Ooh, it looks like it closed under the Tenkan. All right, so that's another one you want to watch out for. It did stop at the bottom of the cloud. Maybe it will bounce on Monday. Goldman Sachs also pulled back in, and found some support right there, right above the cloud. We'll see if that can also recover. It does still look good on the weekly overall, except for the fact that we've got a long shooting star type candle. I don't like these. Palantir in between the two moving averages on the weekly chart, 2 weeks in a row under the Tenkan. On the daily chart, it's inside the cloud, so no on that one. Momentum is under the cloud on the daily, and on the weekly it's under the Tenkan. Broadcom is under the weekly on the Tenkan there on the 9 period, and on the daily it looks like it might potentially bounce here soon, but we're in a decline here, so I'd stay out of that. I'd stay out of Target. Obviously, still look at that declining 200-day moving average on Target. BMNR under the cloud. No on that one too. That's the Bitmine Immersion Technologies. I had drawn this box. Let me show you the weekly chart. Price was kind of like stuck in here for a little bit, and now it's getting back under. So that's not a good sign. And on the weekly chart and daily chart, it's not looking particularly great. This is very volatile. This is the stock Tom Lee was talking about. He was appointed chairman of Bitmine Immersion Technologies on June 30th of this year, pivoted to focus on building an Ethereum-centric treasury, aiming to become the MicroStrategy of Ethereum, as he was mentioning on the show. Let's see, what else, folks? We got to look at Apple real quick. Apple still holding up above the Tenkan and Kijun and Ichimoku Cloud. Here's a weekly chart, still looking pretty bullish overall. That's the only one. Tesla, okay, this week closed under the 9 period. On the daily chart, it was found some support at the cloud. You have to admit, it's very interesting how price stalls exactly or opens up at a specific level right at the cloud and then moves up, finds that support, maybe briefly breaks under it, pierces the cloud, but then continues on. So Tesla, it could potentially, they call this a piercing line pattern. It's a bullish pattern, but it's still under the moving averages, so I'd stay out of that. Meta, not looking good here, down 0.07%. That's the daily chart. Okay, we got a bullish spinning top. Maybe something will happen, but here's the weekly chart. Also stalling again at the cloud for a second week. It's a very thin cloud right there at that point, which means it's easier to break through. We'll see what happens. Microsoft. A bullish harami pattern has formed on the weekly chart right there. So this one has potential to bounce next week. All right. What does that mean? Why is it bullish? Because last week on Friday, this is where the price was. On Monday, price gapped up, as you can see right there. Okay. And then it moved up the rest of the week. You can see that all on the daily chart. So this was the low here, right? And this was Monday, so you can see how it gapped up right there, continued on, and now it's still under the cloud though, so I wouldn't be touching it. Obviously, that's why it doesn't have a blue flag. Amazon on the weekly chart, holding right at the Tenkan on the daily. It's right under the Kijun, so stay out of that one. Let's talk about the strongest ETFs here. We're not going to go into all of these, otherwise this video is going to be super long. I will be going over sectors in tomorrow's members-only video, folks. Let me talk about that for just a second. If you want to become a member, it's one step up from subscribing. I do appreciate everyone that subscribes. It is free to subscribe. It's, and you can find my videos in the subscriptions once you do, every time I post a new one. But if you want to get access to the members-only videos, click on the join button. And then once you do, select either Blue Cloud Trader level membership or Blue Cloud Legend to view the exclusive member-only videos. If you want to support the channel, become a Blue Cloud supporter. If you want to get daily updates on my trades, become a Blue Cloud Legend level member. That's the additional stuff that you get, right? So you get the daily trade updates like the one I did earlier today. Before the market closes, I share what trades I've added, what shares I closed out of. And then in the weekend video, I go over my entire portfolio and I share all the trades that I placed throughout the week, why I added, why I closed out of the positions, so you can kind of get a better sense about my strategy, okay? Alrighty, let's get back. As Jim Carrey would say. Alrighty then. Okay, so let's see. We're going to talk about the sectors a little bit. XBI, biotech looking good. Okay, this ETF looks pretty good. Here it is in the daily chart. Still holding up above 113.21. Here's the weekly chart. Very strong uptrend for biotech. Up 1.88% today. XLE, right? We talked about how energy is looking strong. Now, I am concerned that it's stalling at this trend line. It could pull back next week, possibly. But, you know, the force is with it right now. As you can see down below, the volume has been increasing. ADX is moving up. Positive DI is moving up. Negative DI is moving down. So this particular ETF looks good. I'll be doing a more thorough analysis of the entire energy sector and industries within the sector in tomorrow's video. So it's going to be a little bit more in depth. This specific ETF is not really good representation of the energy sector, honestly. There's only about, let's see, 22 stocks within it. It's very difficult to get an assessment about a sector from a small number, just a small number of stocks, okay? So you need, so what I, as you'll see if you do watch the video, you know, there's a lot more data that I look through, and I also share what specific industries, because you know, you could have a strong sector, and then the one industry or two industries, or maybe even more, are just terrible, and you don't want to be jumping into those. So I do like a really good analysis of that segment, I think. And it helps me to then identify, right, the strongest stocks that are within the strongest industries and sectors. So you're doing that top-down approach, because this is, in fact, a stock picker's market, okay? It's not, you know, you buy everything. Certainly not. Okay, let's keep going. XLV is another one I like. It's got the blue flag, okay? Why is that? Because as you can see here on the weekly chart, price moved up quite a bit this week. It did come up to close to the 155.01 and retreated a little bit. This is the daily chart right here. You can see that shooting star candle. You know, it's taking a breather, I think, and it might come down and retest this 150.32 level. Maybe drop another percent maybe next week, potentially. Or maybe just kind of go sideways for a little bit. Take a breather, like I said. Sometimes the stocks go too fast, too furious, and then, you know, you get an exhaustion type scenario, which I think is what happened. People started taking profits around that level because it got close to the 155.01. Why is that an important level? If you look at the weekly chart, go back in time, it's this prior high right here. So you can see that right there, that candle right there, from October 18th of 2024. That's how far back I go to find my levels, 2024. And if you go further back to this level here, which is in September 6th of 2024, the 159.64 level, that's the all-time highs, it looks like, for healthcare. So that's where I think it's heading, right? As you can see here, you can see that on the monthly chart. Monthly looks good. All right, let's go to SLV, silver. Similar situation. It came up close to the 49.25 level, and then the silver people started, you know, silver owners started, people owning stocks in silver started to take profits, and it brought the price down 3.08%. This is the weekly chart. But it still looks bullish, right? That's why it's got the blue flag. Prices on the weekly chart above the Tengen-sen and Kijun-sen on the weekly, and here it is on the daily, also holding up. So you can see it came up here on Wednesday. We had that bearish harami that I talked about. And whenever you get a bearish, any type of pattern, candle pattern that's bearish, you know, it doesn't necessarily mean it's always going to drop like it did here in this case. But it's just a higher probability. That's all it is. It's a numbers game. You know, So, and that's what happened basically. And why is that a higher probability? Again, because the candle tells us a story, right? Again, here we were closing here on Wednesday at this level. On Thursday, we opened at that same level, and instead of continuing to move up, right, we started dropping, and we closed within the candle. All right, so that's called a bearish harami, and that's generally going to, have a negative effect. Here's another scenario similar, where you have another bearish harami right there, and that led to the price dropping. Doesn't always work out that way, right? Because here's another example where it actually gapped up. So what you want to do is, after you see something like this, is check to see how is price reacting the very next day after the pattern is formed. If it gets underneath, okay, obviously it's going to continue probably dropping a little bit. Okay, next. Well, I'm not going to go through all these. GDXJ is, is up. Let me see if I want to cover any of these. I do want to cover gold and Bitcoin, I guess. IBIT is continuing its drop. They did talk about Bitcoin. You can see that down 3.8%. Bitcoin is one of those few ETFs that is more of a buy and hold, like having a specific percentage of it in your portfolio. I think that's the correct way to go. Also, like I think, one of the people talked about that. And it's just sort of an insurance. The way I look at it is as an insurance policy in case the US dollar completely collapses at some point, which is, with our national debt, it's not completely out of the question that could potentially happen in the future. If all countries decide to go, move away from the US dollar, we could see the US dollar drop significantly. What's going to happen in that scenario? Well, guess what? Alternative currencies and currencies that are, well, this is not even a currency. This is an asset class, but it's a way to hold, an asset that's not tied specifically to the government and it's what it's doing, right? So yes, it's dropping right now. It's dropping in price. And at some point, it should recover like it did back here. Okay, it dropped the last time that we reached a high back here in 2024, it dropped approximately 29% in 3.3 months and then recovered. So let me see, how much was that again? It was about, it was about a 28% drop or so. Let's see how far we've dropped from this high here so far. We've dropped 25 or so, 25. So maybe, it could be similar. We could drop another 3% and then see us start seeing a rally. You never know. The problem here is that it did break through this prior low, and where might it find support next? I can see that right there. I see that. I don't know if you can see that little candle. That low right there is 52.76. So 52.76 makes sense to me. And it's getting close to it. Right, we're about literally 0.97% away. So we might see a potential bounce here at this level. I'm just theorizing based on what I'm seeing in the past, where price in the past stabilized, right? Created that level right there. And you can see it kept on finding support at that level. So if it found support at that level back here in April of 2025, there's a higher probability it's going to find support again here, this coming week. We'll see if I'm right. All right, let's keep going. Actually, I'll just look at a few of these. SMH, okay, today was up 0.05%. This one created a bullish piercing line pattern. It's when the price gaps down, moves back up, and closes within the body of the candle. So that's positive, but it's still under the moving averages. All right, so we're not out of the woods with SMH and semiconductors. Remember, NVIDIA is the stock that we're waiting to hear about in their earnings announcement. And that's going to really trigger the market one way or the other. Gold, also, it dropped 1.8%, but it stayed above the Tengen. We did have that recent crossover, negative crossover, but it looks like it might bounce on next week. Let's see, is there anything else I want to talk about here? No. All right. Let's see, what else? ORI, this was our members' request. Old Republic International Corporation, a really nice pick. Check this one out. On the weekly chart, we've got price, okay, breaking that $44 level. What's that? Where's that derived from? Looking at that weekly chart, if we look back at this week, October 10th, 2025, It was a reversal, okay, pattern. It was a spinning top. Price dropped from that level all the way down to that level, about 11.24%. What did we get? We the very next this last week here, the week prior, week ending November 7th, we had a bullish harami. Price closed above the Tengen-sen. That was the first signal that, hey, things are starting to look good again. All of a sudden, right? Price was already above the cloud, so we already knew that we're in the right direction here. We're in the right state. We got above the 44 level. I think we're going to see a continuation here. But if you look at this daily chart, now it doesn't look, it looks normal here. But if you look at the daily chart, you can see this big, strong move up, right? The buying just started going crazy here once it reached that 200-day moving average and the bottom of the cloud, which coincided. Okay, and then just kept on moving up, moving up. You can see how it stalled right there temporarily at the Kijun-sen, though. Isn't that funny? But then it never materialized into anything. That's why I always say, usually it's a good idea to wait to see if what happens the very next day. Does it get under the low of that reversal candle? It did not. It continued moving up. And it took out this candle. So now I think we're going to see a continuation. And now this 44 level is a support level that you can use going into the future. If price gets under it again, okay, it's more likely to come back down to the cloud again. And then maybe it needs to, before it can continue its move up. It might start to experience exhaustion at this point because it's been moving up so much. All right, guys, that's going to do it for this video. Thank you for supporting this channel. Don't forget to like and subscribe. We just recently reached 25,000 subscribers. And I really want to thank everyone for that. One other thing I wanted to mention is if you do end up joining, where can you find the members' videos? Well, you just scroll down. Here they are. You can see, in fact, you'll be able to access my member-only videos from prior weeks as well. So you can see how my performance has been, week after week after week. And then also, what's the other thing I wanted to talk about real quick? Oh, yeah. Once you do join, okay, there will be a new tab that pops up, and it will say membership. That's where you can click to find the posts, the daily posts that I place, or under posts too. I think you'll be able to access that there too. It will look more like this. So you'll see this membership tab, okay? And I recently shared one as a sample so that you guys can see it here. This was the most recent one, 4 days ago on Monday. I posted a post. So you can see here, Monday, November 10th. This is what a typical one looks like. You always want to click that read more button. You can see the stocks that I added. Okay, the stocks I closed out of. And then I also attach a screenshot from my Blue Cloud buy scanner. And these are the stocks that popped up. Okay, the list of them on Monday. All right, that's going to do it, guys. Thanks for watching. Appreciate you all. Have a great weekend, and look out for that members-only video.
you.